Well, for investors, it's decoding the sell-off. For companies, it is decoding the slowdown. We've been trying to decode the sell-off. Auto is where the pain, I think, is visible, both in terms of consumer demand, job creation, and also inventory levels. So I'm just going to first, bring our viewers up to speed with what's happening to some of the auto stocks. Most of the auto stocks, given that there is an inventory challenge, slowdown impact, pressure on margin, auto stocks are at a multi-month low. But what is the way forward? I mean, India. Is this slowdown a cyclical slowdown, or this is more like a structural pain which is here to stay for next couple of quarters? If yet indeed, if not, then how soon will things really turn around for the auto sector? So to discuss all that and much more, we are now joined by Mr. Pawan Goenka, Managing Director of Mahindra Mahindra. Mr. Goenka, good morning. Thank you for joining us. What is your understanding between the last time we spoke versus today? When we connected with you about 2.5 weeks ago, your general view was that the slowdown will get worse before it gets better. Have you seen any incremental change which will make you believe that things are getting better, or things are only getting bad to worse?
So, well, if you look at the performance in the month of July, clearly July was no better than the previous quarter. If anything, it was worse because the passenger vehicle industry was down by 31% compared to 18% degrowth in the first quarter. So the question is that, is this bottoming out, and are we going to start seeing a turnaround from August onwards, or do we have a few more months of pain left? And that obviously is something that there is no crystal ball answer to. We obviously hope that we have seen the bottom and start turning around. So let me talk about a few green shoots that we see here. Number one, yesterday's announcement by RBI of 35 basis point reduction in interest rate, as well as the effort that is being made by RBI to ensure that the rates are passed on to the consumer, as well as availability of money to lending both for dealers as well as customers, is a very positive sign. And if that translates to on-ground improvement, that's clearly the very big deal for the turnaround to happen in auto industry. So that's a very big green shoot for us. The second one is, of course, the monsoon, which has been pretty good compared to what was expected at the beginning of the monsoon season. And August-September forecast is also for normal monsoon. So that is always good for auto industry as well as tractor industry both. So that should provide some positivity. The third one is the fact that the commodity prices have been down in the first quarter and will continue that trend, is a positive. And finally, the festive season is around the corner, and we always look forward to that to bring some momentum back in the industry. And we hope that this time the festive season will be better than last year. So I cannot say that the trouble is obviously over, but there are some positive signs. We also had, the industry had a meeting with the Honorable Finance Minister yesterday, and the Finance Minister has said that they will look at all the information data that has been given and come back fairly quickly on if the government will be able to do any intervention at this stage or not. And if that happens, obviously, that's going to be a very positive, because the industry is looking forward to some government intervention, as was done in 13-14, as were done in 8-9.
Quite a contrasting commentary, Mr. Goenka, I must say, from yesterday evening when you spoke after your numbers. But if you are seeing those green shoots and you do anticipate that things will only get better from here, then why no guidance from you?
Well, that's because, as I mentioned yesterday, and I haven't changed anything between yesterday and today. Perhaps maybe on TV it's appearing different, but I said exactly the same thing yesterday. The primary thing that we are looking at is, will there be any kind of government intervention at this point of time? Because all the things that I talked about earlier as green shoots are directionally the right thing to do. But we do need some kind of an immediate stimulus that would prompt the consumers to come back to the dealership and start buying, and that can only come via some GST reduction. I kind of, as I said earlier, that I hate to ask for it or expect it, because industry should be catering to itself. But we are in a situation right now that we have had 12 months of slowdown. and therefore something is required to turn us around to go from, as has been said, from the vicious cycle to virtuous cycle. And the whole outlook will depend on whether that is happening or not happening.
Okay, even though we saw you on TV only yesterday, but I will move on from that subject. But in the interim, you know, while you are hopeful that the government may now get into action mode and maybe assess or, you know, some sort of concession on GST perhaps maybe in the works. In the interim, what we would like to understand is how is it that you are trying to counter the weakness? How are you managing your inventory levels? What's the current status of inventory at M&M?
Well, so as we talked about, since we talked about yesterday, as I mentioned yesterday, that relative to the industry, though industry has been down and so is Mahindra, but relative to the industry, we have performed well in the first quarter. Market share in passenger vehicle was up about 1.3 percentage point. Our market share in three-wheeler was up about 1.2. Overall, up about 1.2. And that's because of the new products that we had launched both in the commercial vehicle segment as well as in the passenger vehicle segment. And therefore, we are reasonably confident that trend will continue for Mahindra, and we would in second quarter also hope to see a better performance than average of the industry. And therefore, if I add that to a possibility of industry turning around, and as I said at the very beginning, that I do hope that from August onwards we will see at least slowing down of slowdown, if not getting back into the positive mode, then I think it should be quite well in terms of market share. But in a time like this, it is important for us to look at all possible ways of conserving our expenses, reducing spending, conserving cash. That's not happening for the first time. It's the fourth time that I remember, and happens every 4 to 5 years. And therefore, it's a cycle that we have to ride through, the storm that we have to ride through, and come back stronger at the end of this down cycle. So we are looking at very, very tight inventory control. Right now, I would say that we probably are about 2,000 to 3,000 inventory more than what we would like to see. That's not a big deal, and we hope to come back to normal inventory in the August cycle. But going into the festive season, having a little bit more inventory is always good, because if there is a sudden spurt in demand, then we need to be able to have vehicles in the dealership to sell. So inventory is not a concern for us either in the auto or in tractor, same situation. In the tractor also we have had a market share at 42.9% after the first quarter. And if we continue with that market share trend that we have, I think that will be fairly good. I am, as I said yesterday, more hopeful that monsoon will have a fairly positive effect on tractor, and therefore we should see some turnaround in tractor industry, and we are projecting 6 to 8% growth for the remaining part of the year for tractor industry. So overall, obviously we live in the industry, and therefore we cannot be significantly away from the industry performance, but I am hopeful that just like in the first quarter we did outperform the industry, we would continue to do that in the second quarter also.
Mr. Goenka, you know, the numbers or the data that we've been seeing reported is also, of course, at a wholesale level. On a retail level, how is the data looking to you? And if it isn't as depressed at a retail level, when do you actually see things equalizing by? What's the kind of timeline you're anticipating?
Sorry, can you repeat that question, please?
I was saying the data that you're reporting is, of course, or you're looking at is at a wholesale level. If you could share with us any insights from the kind of data you have at the retail level, and whether or not that's looking as depressed. If not, when do you actually see things equalizing?
Okay, so the retail data, as you know, is not officially published in the industry, though we do have a fairly good idea of what retails are for everyone. I can speak for Mahindra with the data that we have, where on a retail basis, we actually had a growth in quarter one. where on a wholesale basis we had a 2% degrowth. On a retail basis we had a 5 or 6% growth in the quarter, and therefore we have down stock about 5,000 vehicles in our dealership during the quarter. And from the data that we have available, almost every major company, auto company, had a higher retail than billing, and therefore everybody had down stocked. I do not know whether everybody is at the comfortable level of inventory at the end of the quarter, but I can say that Mahindra is, as I said earlier, at a comfortable level of inventory. I think auto industry, I must say, is reasonably disciplined about inventory. We might have a month or 2 months of going up because sudden drop in demand, but almost every player will bring it back to the normal level, because nobody wants the burden of working capital either on the company or on the dealership, and therefore we normally will not play too much with the inventory. And as you saw that in the first quarter, as I mentioned, everybody had downstocked the dealer inventory to bring it back to the level that they would like to see.
You resorted to some emergency measures, which is like cutting down the temporary workers. Have you decided to downside your workforce? What are the emergency measures you have taken and you're planning to take?
So, as I said earlier, the emergency measures come into 3-4 buckets. Okay, the first bucket is where can we reduce cost within the company, and we are not doing anything that is desperation level, but we are just doing what is prudent in a difficult time by controlling our travel cost, controlling our event cost, controlling our sort of avoidable expenses that we can defer to next year. So that obviously we are doing, and that's the result you have seen in quarter one. When you look at our expenses for both auto and tractor, you would find that our expenses have been marginally lower or at the same level as last year, in spite of 4-5% of inflation. So in real terms, expenses have gone down. Secondly, on the employment, clearly we don't want to do a knee-jerk reaction of laying off people, because that's not that we would ever like to see if we can help it. There have been some reduction in employment of temporary workers during the first quarter. So far, we have not reduced the line capacities. We have managed inventory by shutting down plants rather than reducing line capacity. But if we see that that we have to reduce line capacity, that certainly would have an impact on employment in our factories. We would again hope that we don't have to do it. So far, we have managed it, and we would watch August to see whether we are beginning to see a turnaround. And if we do, then we won't cut down employment. I think that we have probably about 1,500, 2,000 temporary workers who have been removed in the previous quarter. From what I understand for the industry, OEM level is similar to Mahindra. Nobody has had any drastic job cuts yet. I think everybody is watching to see whether they can start seeing a turnaround before they resort to job cutting. But the dealer fraternity has had fairly significant job cut because obviously dealers have lesser of ability to sort of withstand a slowdown. And the number published by dealers fraternity is about 200,000 job cuts in the last quarter. And suppliers are very concerned that if the same situation continued, there may be as many as per data published by ACMA, as many as 1 million job losses that will happen in supply industry. So I think up until now, in summary, up until now, we have not seen too much job losses. But if the situation continues for another 2 months or so, then probably you will start seeing layoffs happening both at the auto OEMs as well as at the suppliers.
Now, we've seen this slowdown in the past, like you said, a couple of times in last 10 years. But the difference between the previous slowdown and now is that the disruptive fear which is coming from EV, the entire reorganization of passenger cars because of shared economy and vendors like Ola and Uber, those factors were not there. Earlier it was a demand issue, the government took measures, interest rate was brought down and the industry revived. But this time, do you think there are multiple challenges? One, demand. Second, disruption. Third, preference. So do you think this pain could be slightly longer than what we are anticipating? I hope my assumption is wrong, but if I have to be realistic, I suddenly see 2 more issues which were not there in earlier instances.
You're absolutely right in pointing out these issues, but I think these issues will be valid for the next slowdown and not for this slowdown. And let me tell you why I think that. While there is tremendous thrust on electric vehicles, government right now is primarily pushing on two-wheelers and three-wheelers, and not so much on four-wheelers. And electric vehicle volume right now is so small that anything that happens in electric vehicle cannot be a cause for slowdown in the IC engine vehicles. And therefore, I will not quote unquote blame electric vehicle thrust for the slowdown that is happening in the IC engine right now on the four-wheeler for sure, and even three-wheelers and two-wheelers, because even three-wheeler right now, the total number of three-wheelers being sold that are electric in a month, the lithium-ion auto, is only about less than 1,000. Whereas the total market is 50,000. So clearly that cannot be the reason for slowdown in IC engine. And when we are talking about slowdown, by the way, we are including the volume of electric vehicles. So it's not that electric is kept aside. And therefore, it's a total overall volume slowdown. When you talk about shared mobility, your point is absolutely right directionally. But I think, again, for this period right now, the effect of that on the overall demand for auto is very, very small. It's possible that 5 years from now that becomes a big factor, but I think right now it's not a major factor because the shared mobility service providers actually are generating demand, and one cannot. There's no data right now to prove that demand is taking away from people who will necessarily buy a car on their own. Yes, there are a lot of youngsters today, millennials, who are talking about not needing to own a car, but our data and our perception, intuition is, as of now, that's not a big factor. But these are things that we are watching for very carefully. These are things that we need to see how it changes the way we design our car, where do we put thrust, focus, but these are more long-term issues than issue of today, of this month, of this week.
Q1, Mr. Goenka, and you would also understand that.
But since you talked about difference from last time, one thing that I do want to point out.
Sure, go ahead.
Yeah, so I do want to point out one thing, that previous time when the slowdown happened, it was probably as much linked to global phenomena as it was linked to what is happening in India. And this time I think it's more of Indian situation in terms of automotive slowdown, and therefore to some extent the solution is lying all within our hands. It is not something where we're looking outside our boundaries to see what happens. Yes, of course there's somewhat slowdown in export also because of the global slowdown, but that's not having much of an impact on us. And I truly believe that the 4 or 5 things that we have talked about yesterday and today that needs to be done to get the demand back, given that festive season is around the corner and given that there is positive sentiment because of monsoon, I think we can quickly be able to turn around if we can take some tough measures, both from the OEM sides as well as from the government side, to help the industry to come out of the current slowdown.
I was just wanting to know, Mr. Goenka, because, Q1 is very critical for tractors in particular. With this period being so weak, what is it that you're foreseeing in the next 8 months? And if you could be a little specific, we'd appreciate that. What's the run rate needed to at least end the year on a flattish note, if not grow?
Okay, so if you look at the overall degrowth right now, we are at, I think about after the end of first quarter, we were at about 14%, 15%, and 18%. At the end of July, we are more like 20, 21%. And therefore, we would need to grow almost at 10% for the remaining 8 months to end the year at even. So that's a fairly big growth rate that is required from where we are with a degrowth of -20 to become +10 for the remaining 8 months to end the year flat. And therefore, without looking at any outlook, without looking at any other factors, I would say that if I just look at it mathematically, to go from where we are to even a flat year will be a fairly difficult task, because that kind of turnaround for the next 8 months is going to be very, right now I cannot imagine that we can grow 10% for the remaining 8 months. And therefore, we probably will end up the year, I'm talking passenger vehicle industry, at somewhat negative. However, if you talk about UVs, And if you were to take UVs out of passenger vehicle, the UV degrowth in the first 4 months has been in single digit percentage wise, and therefore it's possible for UVs to end up in a positive territory. And as you know that many of the new products that have been launched recently are in the UV segment, and some of the new products that are coming up are also in the UV segment. And UV and new products also always create demand, and therefore maybe the outlook could be a little bit more rosier for UVs than for overall passenger vehicles.
All right.
And obviously one of the big concerns right now, a big unknown right now, is what will happen with the BS6, how the last quarter will pan out.
Do you see that impacting prices, Mr. Goenka, given given that, of course, we're looking at that for an improvement in margins, so they've already played a role somewhat. And with BS6, for example, how much more of an impact do you see on prices, and would that not have a further impact on demand?
Well, there are two more, and that's one of the concerns that I have, that there are two more events that will happen in the next 7-8 months that will significantly increase prices of the vehicle. The first one is on October 1st when every vehicle has to have auto airbags and ABS, and that is the right thing to do. I'm not for a minute saying that we should not have had it. But the fact is that for those variants that today do not have airbag and ABS, the prices will go up. And with that, which may be of the order of 18,000-20,000 rupees, that clearly will be a demand dampener for those products. And these are only on the entry level, because the mid and the high variant almost everybody has airbag and ABS, and some of these have already started from July. So that's one, and that's a smaller one. But the bigger one will be BS6, where the prices may go up. And again, I don't know what everybody will do, but let's say of the order of 10% from the current cost of the vehicle for diesel vehicle. And that clearly will have a very big impact on demand. And there is this whole unknown of what happens in terms of pre-buying, post-buying, discounting, premium, inventory clearance. We don't know. So there's a lot of uncertainty that will happen, I would say, in the last 3-4 months of the year, as automakers are trying to estimate demand, produce the right number of vehicles so that they don't have to do any kind of clearance sale, and also make sure they don't run out of BS4 vehicles before the end of the year, and ramp up on BS6, especially the fuel availability, which is from April 1st only, and therefore we cannot sell BS6 before April 1st. So that also creates a bit of a dilemma on how do we manage the whole inventory. So that's a whole new different challenge that we have to face. But I am hoping that when we reach that point, which will be somewhere around December, January, we at least have the worry of slowdown behind us, so that we can then thrust and focus on how do we manage the transition from BS4 to BS6.
If demand does not revive, and I'm using the word if, I hope it revives, it's good news for all of us. What will happen to rest of the year for auto companies then? Are we looking at masked job cuts? Are we looking at real problems at OEM levels? What impact do you think this could have a multiplier? What a multiplier impact do you think the auto slowdown could have in the second half of this calendar and financial year?
So see, it depends on how much of impact is absorbed by the company and how much of the pain is passed on to other stakeholders. Okay, as an auto OEM, I would think that OEMs should take maximum responsibility to ensure that the pain of slowdown is not passed on to our stakeholders. What that means is that we need to take care of our suppliers, especially smaller suppliers who do not have the staying power in a slowdown. We need to take care of our dealers, again, especially smaller dealers, and dealers obviously tend to be not as large as large as suppliers. We need to make sure that we support them during the slowdown. And if things don't get too bad, that we do not have the ability to support the suppliers and dealers, hopefully we can constrain the pain of prolonged slowdown. But beyond a certain point, even the OEMs will not have the ability to absorb all the pain, and we will have to then start sharing it. The first thing that will happen probably is the loss of jobs. And loss of jobs could be, basically it's proportional. The employment that we have is proportionate to the demand that we have, the manufacturing that we do. And if I was to translate the 20% sort of slowdown that has happened, and if everybody reacted overnight to the slowdown in terms of job cut, you probably would see about 15% job losses. Obviously, we don't react to it overnight. Obviously, we try and prolong it. But after some time, you'll start seeing. So biggest impact will be on job losses, both suppliers and dealers, as well as auto OEMs. The second big concern would be on investment. Right now, all the investment, I think, is more or less on hold. I'm not hearing of any new announcements being made by anybody. What was in the pipeline, I think most people are completing, some are delaying. But that will be the second impact, that investments will come down. Third impact will be on overall tax collection. And our calculation is that about 15% of GST comes from auto industry. So if there's a 20% degrowth in auto industry, that would mean about 3 to 4% overall GST collection reduction. So that obviously then doesn't bode well for the revenue collection that the government needs to take care of all the various programs that we have. So I think employment, investment, and tax collection are the kind of things that one would see, not counting what happens to the profitability and the overall financial performance balance sheet of the auto OEMs. I'm talking about what effect will be seen outside the companies.
Thank you so much for joining us this morning for a detailed look both at the earnings, the outlook, as well as the economy. Great having you with us. Thanks so much.